What's up, everybody? Michael Silva here. In today's video, we are going to be talking about some bullish setups taking place in bearish context. You're watching the Stock Market Brief Show. If you're new here, well, welcome to the channel. Make sure to hit that thumbs up if you haven't done so already, and subscribe to the channel if you like technical analysis and intermarket analysis. We're going to get right into it. I actually recorded this entire episode and realized my mic is off, so now I got to start all over. Yay! 11 sectors that were in the green today. If you remember yesterday's episode, we talked about the defensive sectors potentially taking a back seat. They did. We have consumer staples, we have real estate, we have healthcare, we have utilities, all there towards the bottom. Everything was in the green though. Woo! It was a wonderful day on Wall Street. Now, let's talk about the bearish context. Few things here. Deeply inverted yield curve still. 71 basis points negative, and then we have the 10-year and 3-month. That's the 10 and 2. 10-year and 3-month is at minus 64 basis points. People, recession is coming. Don't get FOMO'd out here, okay? It is what it is. Be careful out there. If we take a look at the bond market, so TLT, this is coming into its upper channel right over here. We're starting to still see this rally go up. It's kind of wedging right here. If I were to just draw a little tiny wedge, it's like this, and this has done that before, it's done that before, it's done that before, it's done that before. So we're still within a downtrend. Begs the question, are we moving into stage 1 of the business cycle? That's where bonds go up, and that's where stocks and commodities go down. This is the contractionary phase in the business cycle. Or are we going to continue to stay in stage 6, which is the last stage of the business cycle? And that's where bonds go down, stocks go down, commodities go down. And that's currently where we stand, but we are starting to see some improvement in bonds. So we'll continue to watch this and see what develops. Now, the dollar pulled off a little bit today. We talk about this very strong correlation. If the dollar goes up, watch out in certain assets. If it comes down, hey, could help other assets. As you can see here, right, this big move down in the dollar, boom, propelled the S&P 500 up. Then we consolidated, right? We also consolidated in the dollar. Today it dropped, S&P 500 lifted up. Now, if we take a look at the SPY above and VIX below, SPY is in an overall downtrend. So before we get into the bullish setups taking place, we got to obviously point out the overall trend, right? Bullish setups in bearish context, meaning we have bullish trades in a bearish trend. All right. And the way that we get a bullish trend is by continuing to have bullish trades. Now how do I define trend, right? We have a series of lower highs and obviously lower lows, bing, bada boom, bada bang, bing, boom. Okay. Now, the reason why I'm pointing this out now is because we've been having this consolidation. Now we're starting to break out. We're going to get some fear and some FOMO. If it comes and tags this line around its 200-day moving average. All right, but I want to call out also the VIX. The VIX has also been in an uptrend, series of higher lows, and it's been having higher highs as well. This is kind of flat, but it's been having a series of higher lows and been above this 20 region for quite some time, which, it's going to chop you up, and we can see that here in the price action of the S&P 500. So we're pulling into an interesting area. Why is it interesting? Well, you can see it's been prior resistance, and if you just go across, it's been prior support here as well. So this is coming off hard and fast into a trend line and prior areas of support. So if this comes down further, and we know about the inverse correlation, S&P 500 continue to go up, maybe even do a little fake breakout, maybe it's setting up for a big bull trap. I don't know if that's going to be the case or not, but we need to at least be aware of that because there's a lot of bullish setups and there's also things to be bearish about. Okay, and I'm going to talk more about that. Now, this is one of the charts that I like using. This is something that I learned from a trader named Brandon Chapman. And as you can see here, this yellow line represents back month versus front month volatility. And if the brown shaded area in the back is just the VIX. And when you get up into about this 1.2 range, which is basically showing us that back month volatility is about 20% above the VIX, so front month, that tells us that, hey, this thing could be kind of coming into an area where we're going to see it cool off a little bit, meaning the price action of the S&P 500. So you can see right here, boom, right here, boom, those mark the tops. Very similarly, if you start getting below 1, they can mark bottoms where we've seen up, and then right here, we've seen up here too as well. So this is actually pointing up. It looks like it's could continue to go up into this range over here, 1.8 to 1.2. And if it does, and everything that we're going to be talking about starts moving up as well, be aware of what has happened throughout history at these levels. Okay, so that is something very important to pay attention to. We have the VIX pulling into a trend in prior support, and then we have back month versus front month also pointing straight up to come up into this 1.8, 1.2 region, which can tell us, hey, we can be potentially topping out right around here. Now, if we look at the weekly expected move, we're not too far off of it. And with these setups that I'm going to show you, it looks like, hey, if they start moving up in the right direction and we kind of get some more excitement in this low kind of like liquid market that we're in right now in the holiday season, it could very well press us up higher. So what are those? We're talking about big mega cap names, and that's Google. Okay, so Google is currently, flagging right here. Boom, boom, boom. It's flagging. I would pay very close attention to this trend line right here. If it starts breaking, hey, we can get a nice little pop to the upside. It's going to create a lot of excitement. Google is a huge mega cap name. It's floating right around that 50-day, and people are going to get very excited if they start to see this go up, right? But overall trend is still down. Now, Apple also consolidating. We talked about this one yesterday. Why did we talk about it yesterday? We talked about the weekly expected move. It's not on the screen, but if you follow me on Twitter, if you followed yesterday's video, we said pay attention to that level, and it bounced perfectly from that level. Maybe missed it by a few cents, but on a $150 product, that's pretty darn good. Okay, so if this continues to move up, this one's going to very well help other mega cap names and also the S&P 500 because it has a huge influence on other names. Tesla, too. All right, we talked about Tesla. Tesla, was it going to save Thanksgiving? Well, it was up 1.2% on the day today after obviously getting completely smashed. So a very weak, pathetic bounce. However, if you still look at this on a larger time frame, boom, it's potentially wedging right here. You have a positive divergence. You have a positive divergence. So if this starts bouncing up, I mean, I would look to potentially even find short positions back to 190, 195, right around that area. That'd be a pretty large bounce because we're trading right at around 170. So these are some big moves that could potentially happen. I don't know if that's going to take place here in Tesla, but if we get, bounce in Apple, or if we get a continued move in the S&P 500, why not, right? Why not? So keep that in the back of your mind. I'll tell you this. It's a little dangerous. I like trading it intraday. Holding it overnight in a bearish trend like this, I'm a little scared about that. I'd have to really make my position size small to be able to handle its volatility because I don't want to wake up when it's like 4% down or just opens up slightly down and then moves really quickly on me. So I like to let time kind of go by a little bit in the intraday. I don't really trade in the first 30 minutes to an hour. I kind of just wait and let things set up. And then if something sets up, I'll take it. Amazon also is flagging. You can see here, it's pulling down slightly. We had a little bit of a hammer candle, right? So it moved up on good volume and now it's decelerating volume. Maybe if volume picks back up, we can break out of this flag and go retest that 105, this prior area, or just get a little bit of a pop. We're talking about, even if it bounces to 100, that's $5 per share right there. And Amazon is obviously a large mega cap too. Look at Netflix. Netflix is not nearly as big of a market cap as it used to be, but it did break out of this base. It back tested it. Now it's currently flagging here. And you can see also a nice little hammer candle that's forming. So you have, check this out, a strong move up, boom, increasing volume. Now you have a nice steady pullback, okay? Steady pullback with a hammer candle now. And you have decelerating volume on that pullback, so it's not heavy sellers. So what you'd want to see is start this breaking out, and then you want to see some volume pick back up, and then this can move potentially the length of this prior pull, if that's the case. And that might not move the S&P 500, but if Apple starts moving, if Tesla starts moving, if all these other names, these bigger mega cap stocks start to move, this could very well move too. But we're talking pretty large moves, right? We're trading right at around 285, 286, and if we just come retouch this high, that's 310. Right, that's a big move. Even if it was the 300, right? That's $20 per share, $10 per share, right around those ranges. Okay, so those are some of the bullish setups. Remember, bearish context. All of these are bearish context. Also over here, we have a little bit of a tightening pattern. Remember, markets move between contraction and expansion, right? So expansion, contraction. Is it going to expand to the upside or the downside? What I can tell you is we're going to get some sort of expansion. But the reason why I like when you find these patterns that are contracting is because it offers very minimal risk versus reward. So if you play a breakout, the reward could be up to the 50-day, potentially even the gap fill, where the risk, you just play, okay, if I get stopped, I'll just get out right here if it stops. So you have your risk is right here for potential reward is right here. That's how I look at it. Now remember, once again, we're talking about bullish setups that are taking place from a price action perspective, but they're all in bearish trends. Now, another thing I want to call out is the summation index. It's starting to curl itself over here on that negative divergence. Okay, so are we going to get a couple more days, or is this going to start flipping over here soon, where this is going to start identifying potential change in the current trend, like it did over here, where we marked the bottom and we marked this previous top. Got to pay attention for that. If you take a look at Qs, currently flagging, we're above that 5-day moving average. 15-minute time frames, pretty much across the board, they're getting a little frothy. So overextended, you want to see price digest before taking any stabs there. SPY, also same situation. It's getting a little overextended. Nice move up today, back above that 5-day moving average. So I'm going to wait to see, first 30 minutes to an hour of the trading day, see if it starts to consolidate and anything sets up. And then the IWM started breaking back out. This is kind of a, I'd say this is an inverse head and shoulder, where you see a left shoulder head, right shoulder, and we're starting to break out, and that could easily take us to around 187, 188. So that's going to be one to watch. Also, RSI getting a little overextended there too as well, okay? I want to hop into the zones really quick. We talked about defensive sectors getting a little overextended. So if we're going to see a rotation and see these cool off, the hot ones, which are XLV, that's red, XLP, XLU, they've been on a tear. They're getting to the higher end of their zones. This is going to tell me that, hey, they might need some time to consolidate or back off. And if we do actually get a rotation into consumer discretionary, tech, maybe even financials again, we'll see. We'll start to see potentially those light up red here, soon. And then also we mentioned TLT. It's getting a little frothy here. Not the exact area where I'd be buying it, right? You have potential 2.5% upside versus 7% downside. Doesn't mean that these are probable, but it just gives you an idea where it stands within the zone. And then also we have VIX coming down, right? With upsides getting very big, and then it's coming to its lower range of the zone, which tells me what? It tells me that if this starts taking off, it could be setting up, once again, a big bull trap. All right, and if you like the zones, I post them within my swing trading platform. I give a lot more data on the zones, and then I also give weekly expected moves. I give trade ideas, watch lists. You get access to my stock market indicators there too as well. And then you have access to the entire community. I only charge $9 a month. It is the cost of a Starbucks coffee and a double smoked bacon sandwich. That is all. And you get a month's worth of access to all of it. Just pay annually. That's $90 a one shot. Don't need to have a monthly fee. I'm not a fan of the monthly fees in the first place. But if you want to try it out, $9. If you just say, I'll just do $90, you get an entire year there. Come check it out. Come see the community. Come talk. That's all we got. See you later.